All right, guys, welcome to the third video in this lesson two. We're now moving away from the theory a little bit. This is going to be a more practical lesson because what I want to show you here is how you can find cycles by yourself. So this is my favorite market to trade. This is Bitcoin in late 2021. This here is a 15-day cycle low. It was made in July of 2021. This is where we're going to start our analysis. And we're going to run all the way through to this cycle low here, which was made in June of 2023. And in this example, we're going to do two things in this exercise. I'm going to find the 80-day cycle and the 106-day cycle in this chart using filters. Before I move on to filters, I want to talk about the software just a little bit. This is TradingView.com. This is the charting software that I use. You can either use the browser version or you can actually download the software. This is the software that I downloaded. I like it much better. It is similar, but it runs a little smoother when you run it for your own PC. I recommend that you head over there and create an account because this is my favorite charting software by far. They have all the tools you could possibly need. There's all manner of technical indicators, financial indicators. Through TradingView, you have access to most asset classes and most markets across the globe, not just in the United States, not just within crypto. Once you have an account with TradingView, you don't really need to use any other charting software. So for that reason, I highly recommend you get acquainted with it because all the practical examples, all of the exercises that we're going to do in this course are going to be using TradingView. Let me show you specifically how to set up filters on TradingView for cycle analysis. Now, if you watched the first two videos in this lesson, if you haven't, please do so, because otherwise a lot of what I'm going to be talking about here is not going to make a lot of sense. As I said, this exercise is going to be all about finding the 80-day and the 160-day cycles on Bitcoin using filters. And so let's start from the beginning. What is a filter? Well, a filter is simply a moving average that is displaced backwards by half of its period. And the period of the moving average itself is determined by the duration of the cycle length, or the cycle amplitude. I recommend that when you're finding multiple cycles in a chart, that you start from the bigger cycles and you work your way to the smaller ones. So in this case, I'm only interested in two, the 160-day and the 80-day cycles. So let us begin by finding the filter that corresponds to the 160-day cycle. It's 160 divided by 4 equals 40. If I'm trying to find a filter for the 160-day cycle, I need to use a 40-day moving average, and I need to displace that backwards by 20 days. So how do we do this? All you have to do is click on indicators, type in moving average simple. There's many types of moving average. You want to use the simple one. That's how simple this technique is. Once you have it, all you have to do is double click on it. And this brings up the settings for this SMA or simple moving average. You want to go to, let's make it black here on style. I'm going to click on the color. I'm going to make it black and I'm going to make it really, really thick. Next, I'm going to go to inputs, length or period. Already know that it's 40 days. 40 days. And the offset displacement is called offset. And it's minus 20. Minus 20. Boom. And that brings it up. Now this has gone from moving average to a 160-day cycle filter. And you can see that it overlaps price action quite nicely. And as I showed you in the previous two videos, all you need to do for now is to highlight all the highs and lows you see in this filter, all of them, right? So here's all the 160-day cycle highs and lows in this price action. Now, it's not all the highs and lows. You can see that sometimes the line wiggles a bit. That is just noise. The filter, remember that the filter either mutes or suppresses small cycles, but it doesn't eliminate them completely. So if you see it just if you see the line getting a little janky, that doesn't mean there's a cycle there. That is just noise. And you can see why price is actually quite volatile in this period. But never mind that. There's clearly a low here, and there's a high here. There's another low here. Just blow this out a little bit. There's a low here, high here. This is could be past as noise, but let me highlight it anyways. Low here, 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 and here. Now, without doing any further work, I've already highlighted, you see, I zoom out, and I've highlighted basically all of the 160-day cycle highs and lows just using a filter. You see how easy that was. It took me like a few minutes. The 80-day cycle, if I divide that by 4, that equals 20. That is going to be a 80-day cycle filter. So blue is going to be the 80-day cycle filter. I actually use these colors myself when I do my own cycle work. 160 days is black, 80 days is blue. I recommend that you color code these so that it makes it even easier for you to visually see what's happening. Let me just bring up this 80-day cycle filter. So again, I move on to technicals. I type in moving average simple, double click on that, double click on the line itself. I'm going to change the color to blue just for the color coding. I'm going to make the line thick, but a little less thick just to represent the fact that this is a faster cycle. Then click on inputs, 20 days, displaced backwards by 10 days. And there you have it. This now is an 80-day cycle filter. Now, the two lines, because this is we're looking at a 160 and an 80-day cycle, they kind of overlap. I'm going to hide the black filter, so it makes it a little harder to see where the 80-day cycle is, and I want to focus just on that one. So for that, you just want to click on this drop-down menu here, and you want to hide this one, the SMA 40 close minus 20. That means this is a 40-day moving average displaced backwards by 20 days. I'm going to click on the little eye icon and hide that. Now I'm going to be using the blue arrows to highlight the highs and lows for the 80-day cycle. And we're going to go through it just like we did for the 160-day cycle. So all I'm doing, remember, is just highlighting the highs and lows in the blue line. Here, here. You may be noticing that there's a bit of an issue here, but I'm going to get to that in a second. For now, I just want to highlight where all the highs and lows are according to this blue filter or this 80-day cycle filter. And notice that I'm not counting time at all. Even though I know that this is an 80-day cycle that I'm trying to find, I am not counting days at all. I am simply highlighting all the highs and lows as revealed to me by the filter. That is literally all I have to do when I use filters for cycle analysis. That's how easy it becomes. And here's another one. When the line goes sideways, then it goes up a little bit. That is a cycle low. High. Cycle low. This, I may need to blow this up a little bit, but you can see that there is another cycle here. This is similar to that example from 2015 that I showed you in previous lessons. Kind of a sideways flat 80-day cycle, but it is still there. Proceed with this. Here. All right, so now I've highlighted the 160-day cycle highs and lows and the 80-day cycle highs and lows in the price action. Now there's one final thing that I need to do, and that is I need to match these highs and lows with the actual price action because I was only using filters. So let me just hide both filters now. So now all I'm interested in doing now is, now that I've drawn these arrows that pointed to highs and lows in the filter, I'm going to line them up with the actual price action. And this is not too difficult. You can see that in this case, here's a low, here's a low. Fix these a little bit. This is the principle of synchronicity in action. You can see that here, which is July of 2021, we have both a 160 and an 80-day cycle low. Here's also, here's a high. Remember, all I'm doing here is moving these arrows a little bit so that they line up with the actual price action. Now, remember in the previous videos, the filters overlap the price action quite nicely, but they're not going to point exactly to where the high is or the low is. The actual turning point is going to be close to where the filter highlighted, to where the filter was topping out, bottoming out, but it's not an exact match. So you may need to do a little bit of this. You need to move the lines a little bit once you're done with your analysis. So I have a black arrow here. It's highlighting a low. It's clearly this low. Again, I'm just moving the arrows a bit so that I'm properly highlighting the actual highs and lows in the price action. I'm using the principle of synchronicity a lot here, because oftentimes you're going to find a 160-day low that is also an 80-day cycle low. Or rather, I should say, remember that every 160-day cycle low is also an 80-day cycle low. So a lot of the 160-day highs are also going to be 80-day highs. So I'm simply lining them up. Actually, at one point, you may not even have to do this anymore. I don't personally do this anymore. You may need to do it at first to get acquainted with the cycles and the price action, but once you get used to it, don't worry, you're not going to have to do this anymore. But I recommend that you do it first, that you actually visually highlight the lows and the highs, color code them so that you understand exactly what you're looking at. Eventually, it'll just become second nature to you. Now, remember, we're looking at two cycles here, 160 days, the black arrows, and the 80 days. Here's the thing though, look at this cycle. What I'm gonna do now is I'm gonna use trend lines to connect the blue arrows to highlight the cycle. Here's what the problem is. I have two arrows here, black and blue. The high is also black and blue. The low is also black and blue. I'm saying that this cycle here in this box, the side of this box, which is 65 days, is both a 160-day and an 80-day cycle. And that cannot be. A 160-day cycles has to be made up of at least two 80-day cycles. The principle of harmonicity states that each 160-day cycle is made up of two, on average, 80-day cycles. Specifically, I cannot have a 160-day cycle that is made up of one 80-day cycle. This is one of the limitations of filters. Sometimes it will highlight a cycle of two different amplitudes and highlight it as the same thing. In this case, when this happens, I just eliminate that 160-day cycle. Why? As I just stated, each 160-day cycle must be made up of at least two 80-day cycles. By eliminating those two black arrows, I can now say that this cycle this 160-day cycle is made up of two 80-day cycles. One lasting 65 days, the other one is going to last me 120. So to restate, when I do this in preliminary work using filters, and I find that one cycle is made up of a single sub-cycle, I have to eliminate those. That is not valid. This is how we use the principles in practice. This is why lesson 1 is probably the most important one. You need to learn all the principles. Because the principle of harmonicity states each cycle must be made up of at least two smaller cycles. I hope that was clear, but in case it wasn't, don't worry. As you move forward, you're going to see how logical this is. So in practice, between each black arrow, I should have at least two blue arrows. Again, if it sounds too complicated, it's going to become second nature at one point. If you think about it for a second, it is somewhat illogical to say, hey, this is an 80-day cycle and it's also a 160-day cycle. That doesn't actually make any sense. 160-day cycle should be larger than the 80-day cycle. So by eliminating these duplicates, by eliminating these cases where one cycle cannot be broken down into its smaller components, we actually come up with a cleaner picture for what prices have been doing in this time period. Here's another problematic one. Here's a black arrow. I have, and then the next black arrow is here. And there's nothing in between. I'm basically saying the same thing again. I am saying that this cycle is both a 160-day and an 80-day cycle, and that cannot be. Therefore, I'm going to eliminate this as an 80-day cycle low. Now, once I eliminate this as an 80-day cycle low, I'm going to have one low here, one high, another high, and another low. Again, that cannot be. A 160-day cycle has only one high. So I'm going to pick between these two, this one and this one. I'm simply going to pick the higher high. So this one goes. Boom. Now I have two 80-day cycles forming a larger 160-day cycle. Okay, so let me highlight this with a vertical line, vertical black line. So in this case, I'm saying that between this vertical black line, this vertical black line, there's going to be 3 80-day cycles. So this is actually how I used to do it. I used to have these trend lines that would highlight a cycle that I wanted to visually see. Now, it's no secret, if you follow my work at Wise, I like to track the 80-day cycle on Bitcoin. So typically what I'll do, or what I used to do, is I would draw trend lines connecting all the highs and lows of the 80-day cycle, just so that I could see what was happening at any given time. Now, in this case, as I'm just showing you here, there is 3 80-day cycles making up one larger 160-day cycle. The total duration for this one is probably way longer than 160 days. Yeah, it's 206, and that's okay. The first component is only 40 days in duration. The second component, 70 days in duration. The third and final component is 97 days in duration. So again, watch this video again, make sure it is clear how to find the filters, how to find the cycle highs and lows using the filters, how to line them up with the actual price action, and finally, how to force synchronicity to make sure that each cycle component is also made up of smaller cycle components. This is very, very important. You're going to see in future lessons why this is so crucial to have a clean picture of what is actually happening. Now, there may be other tools that you may want to use for cycles. But one thing that could be useful to you is this technique that I just showed you, where I highlighted using trend lines. I just connected all the highs and lows on the blue arrow. This is a technique that you might want to use. And this will highlight visually for you. It makes it very easy to see. If you wanted to highlight multiple cycles, then I do recommend that you follow the color coding. Say that I wanted to draw the 80-day cycle and the 160-day cycle. Something you could do is just make all of these lines blue. I'm just going to do it for the first 4, by the way. So you could draw them blue, for example, and then in black, you could do. The way I'm setting these lines up, these trend lines, is I'm double clicking on them. It's very easy. Make it thicker. Represent a larger cycle. You could try to do something like this, where you're highlighting each cycle using trend lines, using the color coding that you chose. Another thing that you notice, if I bring up the filters again, I don't actually have these. I don't look at the filters. I only typically use filters the first time that I'm looking at a chart. I want just key insights on where the highs and lows are. I go through this entire process. I line them up using the arrows. After I'm done with that process, which you only have to do once really, then I hide the filters because I don't like to have clutter in my charts. Something that I will do sometimes is, even though I may not highlight all the past highs and lows, I may highlight horizontally where the highs and the lows are. So for example, something that you may have seen me do in my work is that I will take the last 80-day cycle high, and I'm going to highlight it in green. I'm going to take the last 80-day cycle low, and I'm going to highlight it in red. So that way, you know that, it breaks the green line here, it is actually trading above the last 80-day cycle high. If it breaks the red line, it's trading below the last 80-day cycle low. Now, that is the subject of a future lesson, but these can act as support or resistance, and even if they don't, they can act as indicators for you to take action, either to go short the market or go to cash or go long. The key takeaway though, if you want to take my advice, I definitely recommend that you use the arrows. And for those of you who need more of a visual aid, you can also employ this technique of using the trend lines to highlight the highs and lows. But over time, to be perfectly honest with you, it's just going to become second nature. You're going to use the filters. You may not even highlight the highs and lows using arrows. You just use the filters to have a bird's eye view of what cycles have been doing in the recent past. And they use other indicators, which I'm going to teach you in the third lesson, actually. So the one upcoming, I'm going to teach you some indicators that this model uses. I prefer to use those rather than highlighting where the highs or lows are. And this is all courtesy of filters. But before the use of filters, this was a lot of manual work, counting time and counting the number of days. With the use of filters, you don't actually have to do any of that. Your job becomes as easy as finding the right setting for each specific cycle, highlighting all the highs and lows, making sure that the principle of synchronicity applies, and you're off to the races. So I hope this was clear. In the next video, we're going to do this again, but I'm going to ask you to do it yourself before I show you how I did it myself.